Let's go, part 2. It's Pablo Disco Bar. Welcome, man. Hello, everyone. Can everyone hear me? Can everyone see the Bitcoin chart? Hear the music? Is the volume okay? Just making sure before I share on Twitter as well. Yes, and thanks. Perfect. We can see it and volume is good. Awesome. Maybe music is a little bit quiet. Should be better now. Hopefully things go a little smoother than last time. We had some problems with the mics, but it's all about the content, you know. We'll wait a couple minutes so some more people can join. We've already got like 30 people in here, which is awesome. Just sharing on Twitter, and then around 1 o'clock we'll start. Your life makes my day easy. Nice. So everyone survived the downside. Everyone freaking out about a freaking 4 or 5% dip. And guess what, right? Where are we trading? Still inside a stupid range, so nothing to worry about, to be honest. But hey, we'll get into the details on the chart on Bitcoin in a second, and then Jack will give his thoughts as well, and as well cover the FA side of things as last time. El Romano, what's up? El George. Please say hi. We won't do any requests today, unless maybe we have some spare time, but I think we'll focus on Bitcoin this time, and on the FA side of things as well. The weekly is not looking too bad, in my opinion, but of course still some days before the close, but so far it's looking okay-ish. Hello, NRO, double WW. Welcome. Right, so I guess it's 1 minute past 1. So we'll get started. more than 40 people in here, which is amazing. So we'll do the usuals. First, I'll start off with the Bitcoin chart. But today we're joined again by Jack Green Crypto, focusing on the FA side of things. Jack, can you hear me?
Hello guys, yes, of course.
Awesome.
I hope everyone can hear me this time loud and clear, around the same loudness than George would be great.
We'll see in the chat. Can everyone hear Jack?
Hello, hello. I'm excited today. I prepared a lot. You will see in about half an hour when George is finished. So I prepared the whole day to make an Excel sheet for you guys to look where we are bullish, where we are bearish, and what's it going to be for the next couple of months.
Awesome. Everyone can hear you, so that's an amazing start, I guess. I guess we'll get started with my side of things, with the chart, and then we'll move over back to you. All right.
It's crazy. So you retweeted me on Twitter, the stream, and there are already 400 people tuning in on Twitter alone. It's crazy.
Hey, let's go. Amazing. Okay, so let's get started. So starting with Bitcoin, right? We'll cover the high time frames as well as the low time frames, some plans, the trades that I'm in, the trades that I'm looking at, and all of the usuals. So starting off on the monthly actually, and let me start off with a clean chart. So it's all from from a naked chart, right? Some levels on the monthly that you want to be watching, in my opinion, especially in this local range, are going to be these lows. Hold on 1 second. Are going to be these lows and these highs. Why? Because even just by looking at it this way, right, on a monthly, you can see what's been key resistance and where's key liquidity gonna be resting, and that's definitely gonna be above these highs, unswept monthly highs right there. And the lows on towards the opposite sides of the range right here are the lows that got swept and reclaimed before the move back towards the opposite side of the range. Okay, so on the monthly, what can we conclude already? That high time frame liquidity is resting to the upside, right? Because of the reasons I just explained. High time frame lows have been swept, high time frame highs are unswept. Weekly, as always, we're gonna mark out last week's low and last week's high. Last week's low right here, last week's high. What do we use those levels for, right? Basically because of the same reason on the monthly, purely from a liquidity standpoint, right? So if last week's low got swept and last week's high is unswept, liquidity is gonna be resting towards the highs, and the other way around, if last week's high is swept and last week's low is unswept, liquidity is gonna be resting to the downside. Obviously, that's your conclusion purely focused on one candle, on the weekly candle, and on one aspect being the liquidity. And it's not only about one thing, as you guys know. We want to be focusing on a lot and combine as many things as possible, and that's how we form our trading ideas and go from there. But on the weekly as well, liquidity to the downside recently has been swept. I'm not sure if it's enough, but we'll see. And last week's high, right, is unswept. Moving to the daily, right, if we mark out these monthly levels right here with a clean range, we're gonna see that the mid-range of those two levels, right, just gonna mark it out like this, is gonna be pivotal as well. As you can see, all I did was mark out these monthly lows that got swept and the monthly highs that are unswept, right? And measured the midpoint in between these levels. And as you can see, that's this red level. And look at how beautifully pivotal this level has been, right? Resistance, 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 broke above, support, good pump, came back to the level, support, and guess where we're bouncing right now? Once again at that support level. So, I mean, for people to panic here, they are, in my opinion, panicking right into support and into a key area. So the area that I personally was watching was maybe a little bit lower, was the area right below these lows. What you usually get when you get this price action making higher lows, right? And then price coming suddenly into these lows, sweeping all of the liquidity at once. You want to be looking for key levels right below those lows to get taken into that area, right? And that's the area where you're gonna get the highest chance of price getting defended by bulls. And of course the other way around, if your highs get swept into a key area, ideally lining up with supply, with key levels, you're gonna get the highest chances of getting a reaction from bears. Okay, that's the reason why I was personally watching all of these clean lows resting down here. Lows, and then of course this one, as well as this one. And in my opinion, even the most important one is going to be this one, but I'll talk about that in a second. So that was the area that I was watching, and for these lows to get swept even before we made all of this upside up here. Okay, why? Because it was obvious that below those lows were going to be key stops, and a lot of stop losses would be resting below there. So it would only be normal to just take out those lows before potentially moving higher and going for higher liquidity. Okay, so at first we front ran all of the liquidity. We, of course, it's never a guarantee that we have to do something for sure. So we front ran all of the lows and started moving higher, right? Swept some highs here, and I'm gonna be honest, when we were trading up here, I thought we were going to front run all of the liquidity here and move to the highs first. At that point, right, the chances of us sweeping the highs, in my opinion, increased a lot. And for me, it would have been more likely that we first saw a spike above all-time highs and then potentially snap back down inside the range and going for the opposite side of the range. Why? Well, all based on liquidity, because high time frame highs had still been unswept. Trading this close to the highs, yeah, was a good sign to me. Okay, but right now, actually, it's a good thing that we left those highs up there, because now we're gonna be able to use that as a draw liquidity whenever we sweep some lows. So only advantages, in my opinion. Going forward, right, we came down towards these lows. We swept some of them, but not all of them. We came into this range mean level, right? So do I think we could get a bounce from here? Well, definitely. As you can see, we're slowly reclaiming last week's low, which is already a good sign. If I remember correctly, the monthly open should be around here as well. So let's mark that out as well. Oh yeah, monthly open lining up beautifully with last week's low. So a reclaim of these levels is already gonna be a good sign. But of course, we'll need a little bit more strength for us to move to new all-time highs. Where do I think is going to be the key resistance that we need to break in order for us to go to new all-time highs? Well, the supply that led to all of this downside, the initial move, right? Here, sideways price action, downside, low time frame range built up, highs swept into supply, max risk to reward for bears with invalidation above here, right? And that's when you get the continuation to the downside. So what would invalidate all bearishness here, in my opinion? That is if we manage to reclaim above this gray area and reclaim, yeah, ideally above last week's high. Why not above here? Because you could say, let me quickly remove these. Why not above here? Because I could still see a scenario where we go for that high, sweep it into this liquidity, right? You can already imagine everyone's gonna get excited, everyone's gonna be talking about new highs again, and then weakness, right? Bears defending their supply area, people who accumulated shorts in this area gonna defend their positions, going into it, sweeping key liquidity, the highs above here. Bet there's gonna be a lot of stops resting there. Everyone who shorted here, right, and even on the downsides for continuation is gonna have their stops there. So take out those into supply, and if you then see weakness, yeah, I definitely could see a scenario where we do this and come all the way back down from there. So right here, for me personally, it's trading right in the middle. Where are the areas where I would do business and where I would where I could see a decent trade ID form? Well, like I just said, for shorts, I'd like to see weakness first inside this low time frame consolidation, but more importantly in this consolidation into the supply, right? What's clean invalidation for bears and for shorts? Well, above this gray area. So wherever you want to be looking for weakness, if you see a low time frame high, that high gets swept and you see weakness and you decide to short, invalidation for me would be around last week's high as an invalidation for shorts. What about longs? Well, personally for longs, I would wait a little bit longer, especially because we front ran some of these lows, right? We don't necessarily have to sweep this one because that one's going to be less significant. Reasoning for that is that it's less isolated. So if you zoom in, right, to the 3-day, for example, you can clearly see, so lower time frames, you can see the lows, but the more you zoom out on that to the higher time frames, you're going to see that those lows disappear. That's because they're less isolated. On the weekly even, you have some weekly lows that are going to be more significant than a random 4-hour low, for example, right? So this low doesn't necessarily have to go, but in my opinion, it wouldn't be a bad thing to get one more sweep below here to truly take them all out and then rip it to new highs. So that's why yesterday I shared a scenario, a low time frame scenario, where I said maybe build a low time frame range here, right? With this as the lows and I don't know where as the highs. Maybe the local high here is already in, maybe not. I don't really care how high it goes, but if we get a scenario where we form a high, chop a little more, right, range a little more, then get one more aggressive sweep below here and a strong bounce, then I think that could be the low win that sends us all the way back to last week's high and potentially even new all-time highs and a lot higher. So that's basically what I'm watching here in this range. So for longs, like I'm already in longs, I've been holding longs for quite a long time, but that's why my invalidation on longs is all the way below here, because in my opinion, right, liquidity is resting here, demand is resting here. What lines up with this as well? OTE from the low to the high. As you can see, OTE lining up beautifully with this area. So if this range results in bullish continuation, in my opinion, we should hold above this OTE area. That's why I'm in a swing long, right? But my invalidation is super wide below this OTE. For additional longs or day trade longs, that's also the reason why I would keep my invalidation a little bit wider. But yeah, if you're targeting like up here, you need some kind of risk reward. So then I'd wait for something like I just explained, where we build a range here, a high, then come down to a low, get strength, and then either you enter on the sweep and you assume that that's going to be the sweep of the lows into demand that leads to the opposite side of the range or the other side of liquidity to the upside, then you keep your invalidation below this demand, so pretty wide below there. As you can see, towards the highs, it's still 1.7 hours, so still pretty decent. Or you could also wait for the reaction. If you get a decent reaction and you reclaim this along with our daily or weekly, whatever you want to call it, range mean, which has proven to be pivotal, right? So if you don't get a breakdown, but you get a quick sweep and a reclaim back above, then that's a long as well, in my opinion, with invalidation at that point below the low that swept this low, and then also just target, clean highs up here, take some off here, just take some off on the way up. So that's scenarios for longs, and then as I said, for shorts, I'd look for weakness, weakness around, a little bit higher probably, because right, if you were to short here, if you were to short here, right there, with invalidation above there, and you target only here, as you can see, risk reward is not the best. So either you wait for all the way up here to get a decent risk reward, or you wait for some kind of bearish pattern with a high and then a sweep of the high, boom, and then short it there with a closer invalidation above the high and target all of these lows. But as I said, high time frame, I see no real reason to panic, because we've obviously got all of this upside and we're still ranging here, still in the same range. And as long as that's a thing, right? As long as we don't break below these lows, break below range lows, I think there's a decent chance that we just see continuation to the upside. You can also see on the weekly chart. Let me quickly remove some levels. There we go. On the weekly chart, if you just focus on this clean range, right, what do you see? Range lows, range highs. Initially good reaction at range mean, right? But failed to break to new highs, instead made a lower high. Some call it a lower high, I just call it more liquidity resting to the upside. Close below range mean, below this red level. It's been beautiful on the weekly, to be honest. Downside, swept all of the lows on this candle. Initially swept last week's high on this candle. Bearish close, everyone got bearish, shorted the lows, strong reaction, closed back above range mean, and for now all I'm seeing here is a clean retest of range mean, a sweep of last week's low, and clean highs resting above us. So I wouldn't panic as long as we're trading above here. If we trade below, what I would like to see, because as I said, I could see a lower sweep, I just like to see this area hold. I think if we are to break below here and below the lows, as I said, and close the weekly, I'd say below this gray area, at that point it's not looking too hot. I'd be careful, but for now all I'm seeing is a break back above range mean, a retest with clean highs resting above us, and that's basically all I'm watching. So if you get, so it's definitely possible that we get more downside on the daily, but what I'd like to see then is just quick downside, a quick wick, and as I've said before, it doesn't need to reclaim instantly, doesn't need to be a wick on the daily, but if you get an ugly close in this gray area on the daily, just like here, right, what you want to see is a good reaction and a break back above range mean here within the next couple of candles. So just like here, ugly close, not a good reaction, but then the next candle just smashed back inside this range, and showed us that there definitely was still a lot of strength in the market. So that's exactly what I'd like to see here. But obviously, I mean, it's definitely possible that we just go from here. The sentiment has changed drastically, in my opinion, from we're going to 100k up here to we're going back to 40k, whatever I'm seeing on Twitter. So take it easy, we're still ranging. All right, is that clear for everyone? So I think that explains it pretty well. Are there any questions in chat?
Yeah, it's super clear. So I muted myself, but what I wanted to say on this is it's crazy how all of crypto Twitter is extremely bearish. It's like you said last week, everyone was charting 100k, and right now I'm looking even in some discords that I'm in, there are even some people charting 40k, and I'm like, why?
Yeah.
Why?
It's
We're
classic.
still raging, we're still bullish, everything is okay. I don't get it.
Yeah, it's classic at the highs, right? You could even say this area, and even as the downside area, you could even take this one. And it's classic when you're trading into the upper gray area, you get everyone talking about 100k, and whenever you get into this lower gray area, you get everyone talking about 40k. But now we're not even at the bottom of the range yet, so we could go all the way down into here and still be bullish on the high time frames. So yeah, it doesn't make sense. But
I think the problem is with crypto Twitter, they're not only Bitcoin guys. I think most guys on Twitter and most crypto people you see are that do crypto 24/7 like we do are allocated to altcoins. And altcoins did take a beater. They really dropped when Bitcoin dropped 2-3%. Altcoins dropped like 20-30%. It was way worse, and I think that's why the sentiment changed a little bit.
Yeah, definitely possible. I don't want to imagine what altcoins are going to do if we trade towards the lower part of this range, to be honest. But it's definitely possible that it gets a lot more ugly. But personally, I don't see us trading back to 40Ks. But yeah, that's just me. I think if we are about to trade significantly lower, that we don't spend a lot of time below 50Ks. But that also lines up. If you draw the range from here, with our range mean right here, 46k, I think maybe wick in there, sweep some lows right here, but sub 40k, yeah, definitely. Yeah, I don't see that, but we'll see. Anything's possible.
Yeah, it's crypto, anything is possible. And I think if we drop, it's not because of the chart. In my opinion, it will be something macro related.
Yeah,
like maybe a war, or that the Fed doesn't want to cut their interest rates yet, or whatever. I will talk about it in a couple of minutes.
Yeah. Well, go ahead, I'd say. I'm gonna try to share your screen.
Okay, let's go.
I don't see any questions, so...
So I'm gonna leave my screen maybe on this Excel sheet for about 30 seconds to 1 minute, so you guys can maybe read already a little bit, because this is where we're gonna talk about today. So I was busy making this yesterday the whole day. It's a lot of criteria how you can value Bitcoin and what's important today. Maybe next year there are gonna be other criteria that we have to look at. A couple of years ago it was different as well, when we thought Bitcoin would be used as a medium of exchange, like a currency. That's not the case today. So that's why, for example, here at the Velocity of Money, I only gave it an important factor of 5%. So we don't really look at it that way currently. Currently we look at it as store value, like gold. But it will be more clear in a couple of minutes. All right, everyone can see my screen, so let's go. So first slides, I always want to start with this. I don't know, so for some people that were not here, what was it, a month ago, this is the most important thing in crypto right now and in all the assets in the world. So basically how it works is, this is the global liquidity index. And this is why we have cycles, not the halving. So it's basically the global liquidity that marks these crypto cycles, not the halving. But it just happened to align, so the global long-term liquidity cycle aligns perfectly with the halving cycle. That's why a lot of crypto people think it's the halving that causes these price spikes, but it's mostly the global liquidity index. Well, I don't say that the halving has zero effect, because of course, due to scarcity, there is less sell pressure from the miners. But this is the most important thing, and this is why we aren't at the all-time high yet. And I will explain it in a couple of seconds. So basically, to short explain global liquidity, just on LE5, this is basically the amount of money there is in the world. So if the money supply is expanding, then the liquidity index will expand, and as well the interest rates. So if the interest rates are low, when it's easy to lend money, that's also good for the global liquidity index. And inversely as well. So if the money supply is going down, then there is less liquidity. If the interest rates are high, there's less liquidity as well. Well, there are other factors as well, but these two are the most prominent ones in the global liquidity index. All right, so moving ahead, the most important thing are the interest rates. So as we saw last week, the Bank of Canada started to cut their interest rates already to 4.7.5%, which is really, really important. As well, in Europe, we saw the Eurozone cutting their interest rates for the first time in 5 years. So, like I said, this is really, really important for crypto and for the global liquidity index. Now the question is, because it's still the dollar, that's a global reserve currency, what does the dollar do? Because also Bitcoin and the dollar, well, mostly the DXY, are inversely correlated. So for crypto, it's really, really important what America does and if they're going to cut rates or not. So this is my next slide, basically. Here you see this is the CME group. So basically the market, what do they predict if we're going to see rate cuts or not? So next meeting is this Wednesday. So this is really, really important because you always see the price going down before the FOMC meeting and then price going back up during the FOMC meeting. So this is this Wednesday, which is today, and it will be at 8 p.m. Central European time. But the thing is, the market only gives it about a 0.6% that the Fed will cut their interest rates. But we know that it's not really important. They will not cut it yet. The most important thing is when Powell speaks, what he's going to say. If he's going to say, yeah, next meeting we will cut rates, or mostly you hear on his voice how he talks, what's it going to be in the next couple of months, and the market reacts extremely to that. So I think it's this slide. So basically what happens always 48 hours before every FOMC meeting, and we saw it yesterday as well, the market drops 10%. Always market drops 10%. If you cannot see it well, I drew it here. So it drops. This is the FOMC meeting. It drops, and then most likely after the meeting, it comes back to where it was. So most likely it's a non-event, unless he will say something bullish or bearish. We don't know yet. Another thing I wanted to share. So when was it? 10th of June, is it yesterday or 2 days ago? The senator wrote an open letter to Jeremy Powell, so the chairman of the Fed. So please cut the interest rates. So we don't know if this is gonna be helpful or not, but I think this will help. It won't help for next meeting, so today, but most likely what I'm thinking. So I'm gonna give you guys my prediction. This meeting, where we see a 50-50, I think we're going to see the first rate cut for the US dollar at this meeting. Why? It's very simple, and this will be my next slide, is because I believe in the 4-year election cycle theory. Well, it's not something to believe in. It's just backed up by 100 years of data that always, before an election, what does the government do? They print a lot of money to pump the stock market, to show that the current administration of the government worked and that the economy is pumping because of them.
Yeah, classic.
It's not a conspiracy theory, it's just backed by 100 years of data, and you always see it. Always the stock market moves. This way I have a chart, I can show it to you later. So why do I say this? Because this meeting date, the 7th of November, is too late. This is 2 days after the election. So the elections in the US are the 5th of November, which is 2 days behind these dates. That's why I think they will cut their interest rates 1 meeting before the elections.
Makes sense.
It's just a prediction. The market gives it a 50-50. So how can you play this? You buy Bitcoin or other crypto assets right before this meeting. So what I'm going to do is I'm going to allocate more capital to Bitcoin in around August, which gives you some time before the meeting date, because most likely always before a meeting date you hear some rumors, everyone is talking about it, and it will be too much of a consensus trade. Everyone will already done it. So make sure you're ahead of the crowd and allocate before them.
Buy the
What
rumor,
else?
sell the news.
Yeah, and afterwards you can sell. So buy the rumor, sell the news. It's a very good one in crypto. It always works. It's so crazy. How long am I in crypto? Already 8 years. It always works. Always buy the rumor, sell the news. It's so easy. We saw it as well with the ETF. It was exactly the same both times, basically, with the Ethereum ETF and the Bitcoin ETF.
Yeah, by the time it's official, it's basically already too late.
Exactly.
To profit from it. So yeah.
And I think it's even a quote in the movie The Wolf of Wall Street, where he says, "Yeah, by the time you read about it in the newspaper, it's already too late."
Yeah,
and it's true.
Exactly.
True. All right. So why is this? Oh yeah, I was here. Here we can see. So now I only showed the US interest rates, but of course, for the global liquidity index, all the interest rates and all the global liquidity is important. And I think this website shows it very well. So the yellow line is the central banks that are raising their rates, and the red line is the central banks that are cutting their rates. And you can see it very clearly, the trend is going down. And I think when this is going down, when the liquidity is at its bottom right now, so the liquidity is going up, I think now we will be forming a bottom in Bitcoin as well. And you can see it very clearly here. So why is this important? Always, so you can see this is data from 2014. When the global liquidity rises, Bitcoin rises. When the global liquidity goes down, Bitcoin goes down. Cycle of 2018, massive spike in global liquidity, massive spike in Bitcoin price. Global liquidity down, Bitcoin price down. Last cycle as well, it's always the same, always the same. It's so easy. So you have to time a little bit when you think that the global liquidity will go up again. I'm going to quickly show the 4-year presidential election cycle. So I think right now we're here at the bottom, a couple of months before the election, and I think the Fed will start cutting their rates in September, yeah, and will start printing some money, and the stock market will go much higher. I'm not the only one that thinks it. So I found this tweet from Jurin Timmer. It's the director of global macro of Fidelity. His chart is better than mine, but he thinks exactly the same, that this is the S&P 500, that S&P 500 will go up until the elections. Always like this, and it most likely will happen now again. So here you can see, I'm going to go over it real quickly, but the Fed is already printing $628 million each day. And this is why, you can see it here, we just started expanding the money supply again. So 0.7% M2 money supply. So this is the money in the US dollar. It's expanding. And as you can see on this chart, when it did this before, the Bitcoin price went up a couple of months after it. This time it won't be different. Another chart as well, because you have to look at more data. I don't always believe in one chart when I see it. No, I look for the same chart from someone else with the same data. Here as well, 0.6%. So the M2 money supply year over year is expanding, super bullish. You can see it as well. What did I write here? So interest rates are bullish to neutral. Bullish, why? Because I think they will start to cut it, but neutral because they didn't do it yet. So it's a bit of both. The macro correlation, what I just explained, the 4-year presidential election cycle, this is bullish, but it's not super important. So that's why I only gave it 50%. M2 money supply, this one is really important. 100%, it just turned positive, but I gave it a neutral because yeah, it's only 0.6% year over year, so it's starting. So maybe we will get there in a couple of months. What I just showed here, so the ECB as well, I forgot to mention it, they raised their target to 2.5% for the inflation. Normally the central bank targets 2% inflation because they think this will incentivize people to buy things and so to incentivize the economy. Now they said, it will be too difficult to get the rates back, to get the inflation back to 2%. Let's say the target is 2.5% for 2024. So basically they admit that there will be more inflation that they want still in 2024, which is good for inflation hedges like Bitcoin, like gold, for example, which have a fixed supply. So back to my Excel sheet. Inflation hedge, bullish. Global liquidity, neutral. And now the thing is the DXY strength. So DXY is super strong. And this is bearish for Bitcoin because the thing is, why is the DXY strong? A couple of reasons. The dollar doesn't need, so the Fed doesn't need to cut their interest rates. Why? Because everything is at an all-time high. Bitcoin almost all-time high. The stocks, so S&P, all-time high. So they don't need to cut it. Other countries did cut their rates, so that's why the dollar is even stronger against other currencies. So the dollar is super strong. As well, I think I got it right here. So this was last Wednesday, I think, and this is why we dropped on Wednesday. Why? Because the US employment numbers were very good. Well, not super good, but they were above expectations, which is why. So you might think, okay, why did Bitcoin drop and the stock market a little bit? Because the employment numbers are good. Well, the thing is, it goes back to, okay, now the Fed doesn't need to cut their interest rates because their economy is going well, employment is going up. So why should they cut their interest rates if everything is going well? They better fight inflation. So because it was good, they won't cut rates, and because they won't cut rates, that's bad for Bitcoin. That's why I wrote here that it is bearish.
Yeah, there's also usually an inverse correlation between the dollar and SPX and Bitcoin in general, right? So
exactly. So the dollar and Bitcoin are super inversely correlated. I don't have the chart right here, but if you put the DXY chart against the Bitcoin chart, it's just the inverse.
Exactly,
always when the DXY is going up, Bitcoin is going down, and when Bitcoin is and when DXY is going down, Bitcoin is going up. So that's why this is super important. What did I forgot something? Let's have a look at my Oh yeah, this is not really important, but Kane Island, so which is a digital research fund. So basically they made a model and they had all the macroeconomic data, so the liquidity, the interest rates, and they put the model over the price of Bitcoin from already 2011 onwards. And they made a model, and so they think right now, because of this macroeconomic model, the fair value of Bitcoin should be at a 60K. The thing why it's not higher is because the liquidity is still super low and we're still at the bottom of this liquidity cycle. So that's why this is the fair value. But Bitcoin is not valued on the value that it's right now, but on the value that people think it will be in a couple of months. And in a couple of months, interest rates will be cut, there will be more liquidity. So Bitcoin is already valued at that price. So I don't think this is a good comparison, but still 60K is very good, which also means 60K will most likely be the bottom. I don't think we're gonna see lower than 60K.
And that number
But if
will
you want,
probably be higher in a couple months.
and that, exactly, that number will be higher, of course.
Okay.
This was everything about liquidity and interest rates, macro correlation, and all. Just one thing I forgot to tell you is the stablecoin liquidity. So this is not macroeconomics. This is just the stablecoin liquidity in crypto itself. So basically USDC, USDT, BUSD, so every stablecoin. And why is this important? So when there is more money, when there are more stablecoins, most likely more crypto will be bought. So this is a very good indicator, and you can put it next to the Bitcoin price, which I did here. So you can see it clearly here as well. So basically when the liquidity is going up, Bitcoin price is going up. Here you can see it will previous cycle, liquidity of the stable coins going up immensely, Bitcoin price is going up. It's not perfect indicator. Why? Because yeah, when the price is going up, the stable coins are going up as well. So it's maybe because of this is happening. It can be because price is going up that there will be more stable coins, or inversely. So I didn't give it that much weight. I think only 30%, but it's something you can look at it. If it's really high and the price isn't following, okay, then you might think, oh, why is the price not following? The price should follow in a couple of weeks. I'm gonna buy. But right now it's super flat. Not much to say about that. So super important what I just said. The second most important thing, as you all might know, are the ETF inflows. So when was it? In January, the US accepted the spot Bitcoin ETFs. So now it's very easy for a lot of big funds, big corporations, and even retail people can buy Bitcoin for their pension funds. So very easy for all Americans to buy into Bitcoin. What do I want to say about this right now is we saw a huge spike into the ETFs. So which means a lot of people or funds or whoever bought a lot of Bitcoins last week. And then you might think, okay, but I'm looking at the price. Where is it? Where are all these people that bought this Bitcoin? Normally, when we have these inflows, last time we had these inflows, we went for our all-time high. So you might think, why is this not happening? And I will explain it to you. So basically, it's a cash and carry trade. So basically, what a lot of big funds are doing, they long Bitcoin spots with these ETFs, and then they go short on Bitcoin on the CME futures. Because at the moment, the funding rates are positive and they return annually. I think back then it was 14%, but currently, so last week it was 14%. But now when everyone saw the trade, I think it's back to 10%.
Yeah.
So basically, all these big funds have a yield-free, risk-free money yearly for 10%. And if you compare that to the interest rates, where they can only get like a risk-free, I think it's 5% or something, this is just the double. So a lot of funds are just buying into the ETFs. And that's why you saw this spike up, but are going short on the CME futures. And you also see it, I wrote it right here. So the open interest is at an all-time high, which normally is super bearish. But people forget that this also includes these record shorts on the CME. So that's why I wrote the ETFs are bullish, but it's back to neutral because it's just delta neutral. It's funds that are going long and short at the same time just to get the fees. Same thing with the OI. I put it neutral to bearish because it's not only people from that are shorting the CME futures. It's also it's just too high in general as well. I have a couple of charts that back what I'm saying. So here you can see the Bitcoin CME, and it goes up. You can see it here, it goes up when the inflows goes up as well. So it moves up at the same time, which most likely indicates that it's, like I said, spot and shorts at the same time. Here you can see it as well. So when we see big inflows into the ETFs, there's the CME futures OI is going up as well. So you can see the correlations, but what I wanted to say is it's not all negative. These ETFs exists, and it's still super, super bullish for Bitcoin in general. Believe me. And you can you don't have to believe me. You can believe this research. So basically, when we see a lot of inflows, it also affects the price super positively. The price is moving accordingly to the inflows. Well, it's not like a one-on-one correlation, but you see when we have positive inflows, it's positive for Bitcoin's price. And when we have no inflows, it's bad for Bitcoin's price. So it's not all negative. I think it's most likely positive even.
So
here I got, yeah, sorry.
doesn't that kind of mean that the ETF, because on Twitter, you know, you see a lot of these charts and people claiming that, well, sharing these inflows charts, claiming that when we have big inflows that it's bullish for Bitcoin, but doesn't that mean that it kind of lost its value now? That people just use it but are actually delta neutral, like you said?
Yeah, whether you want to say that it's not that bullish for Bitcoin, all these inflows.
Yeah, it's just neutral.
It's just delta neutral. It's basically just funds taking on free money. So that's why I put it here, bullish and neutral, because these ETFs at the moment, there is not much Bitcoin coming in from these ETFs because they're short at the same time. But I still put an X here on bullish because it's still a product to make it easier that people can buy Bitcoin. So it's just an extra benefit. It's not super, super important right now, but it's an extra benefit. I think it was more important when they just launched, when there wasn't this cash and carry trades. Then it was more important than right now. I think right now the hype faded a little bit.
Yeah, exactly.
And I think I read once, a couple of days ago, that it's about 40% of the people buying into the ETF are doing it for the cash and carry trade. So, which means, if I can believe that data, that it's still 60% buying for themselves.
Yeah, but the more people that are going to use the ETFs, it also means that they have to buy more spot Bitcoin, right? So the ETF gets used more, so that's a good thing.
Exactly. Yep. Yeah. So overall, it's still super bullish for Bitcoin.
Okay, nice.
But still, like I said, open interest at an all-time high. Well, that is in dollar value. Like I said, it's because of these ETFs, but it's not only because of these ETFs. So I think there will be a lot of leverage that has to be flushed out the system, maybe even before we go to an all-time high. I don't know what you think about that, George. That's more your thing, though.
I mean, I don't really focus a lot on open interest, to be honest. I never really use that kind of stuff. Mostly focus on the chart for real, only the chart. So yeah.
All right. So next up, let me see, is the user adoption. Not super important, so we're gonna go very fast. I only give it a 20%. So user adoption is still going up at the same speed that the internet went up, which is quite good actually. I didn't think it was like this, but I saw this chart yesterday and I still wanted to show it to you guys because this is still really important, because you can value Bitcoin on the ETF demand, macro correlation and stuff, but there still needs to be adoption. If there's no adoption, the Bitcoin, how can I say it? Bitcoin can be as scarce as it can be. So, but if there is no adoption, nobody will buy it. It's the same with gold. Gold is maybe super scarce, but if there is just no demand for gold, the price is zero. So adoption and demand is still super important. How can you measure demand as well? It's Metcalfe's law. So basically, this is from Cane Island. He gives it about a 38K price, and Oh no, so sorry, this is the Metcalfe's value and this is the adoption curve estimate. So I wrote a long tweet about it here. So Metcalfe's law is basically the value of a network is proportional to the square of the number of participants. I already explained it last stream. This is a snippet from our last stream. But the thing is, it's not really that effective anymore. Why? Because most of the transactions are not used on chain anymore like they used to be a couple of years ago. Most transactions are just on exchanges for Bitcoin, that is. So that's why I put it here, these valuation models, but I only gave it like a 20 and 40% because it's not really that important anymore. Well, it is important if we could have the good data, but we just simply cannot because most transactions are on exchanges, which are centralized, so which we don't have the data for. Yeah, you can see it here as well. So the on-chain, this is normally a very good one that I use. So the on-chain transactions to market cap is at an all-time low, which is super good. So that means that that there are more transactions divided by the price of Bitcoin in history. If you understand what I said, because I explained it a bit weird. Yeah. So next up, the scarcity and the halving. So this is more important. Like I said in the beginning, it's not the most important thing, but it's still important because I think before the halving, we had an inflation rate of Bitcoin, so in the Bitcoin blockchain, of about 1.8%. So this 1.8% means that there is more, that there's 1.8%, sorry, supply coming into Bitcoin each year, expanding the current supply. Which is half now to 0.9%, which reduces the sell pressure from miners. I think it was from 12 billion to 6 billion a year, which is still important. So what have I here? Yeah, so and the important thing with that is the difficulty. So basically when Bitcoin is mined, when there are a lot of miners, the difficulty goes up so that each block lasts for 10 minutes. They change it every 2 weeks. And as you can see, the difficulty is still going up. And basically, how higher the difficulty goes, how stronger the Bitcoin network is. And some would say how higher the Bitcoin price should go, because then it costs more to mine a Bitcoin. And I think it was even Satoshi that said the best way to value Bitcoin is the same price that you have to pay for the electricity to mine it. So this is another way to value Bitcoin. So up, like I have here, this is the energy value for Bitcoin. So at the moment, it costs around 80K to mine a Bitcoin, which is higher than the current price. So it's normal because we are after the halving. But because of this, the miners won't be selling. So there will be less sell pressure from the miners, which is super, super bullish for Bitcoin. So most likely what I do is I use the energy value as a Bitcoin support, because you know that the miners won't be selling their Bitcoin if the energy value is above the Bitcoin price. Like I said earlier, I'd like to use different data for the same thing, especially for energy value, because you don't have to believe everything that is written on the internet. But this one I like as well from Macro Micro. Here they say it's 75K. So at the moment, the Bitcoin energy value is between 75 and 87K, which is above Bitcoin's price. So for me, this should be the bottom of Bitcoin. And I gave this an 80% because this is super important. And because of this, the miners are capitulating. So some miners are still selling their Bitcoins, and also the hash rate is dropping because just some miners, they capitulated with their current equipment. They just cannot follow it anymore. They, as you saw, it costs more to mine a Bitcoin than the Bitcoin price. So some miners just gave up and stopped, which in Bitcoin's past was super bullish, because always when we saw miner capitulation, that formed the bottom for Bitcoin. And you see it as well in just price capitulation. When the sellers are exhausted, this is most likely when we form a bottom. With the miners, it's exactly the same thing. When we see the miners capitulating. So they say, oh, I cannot take it anymore. I have to sell everything. When the mining corporations are going bust, that's when we see a bottom forming for Bitcoin. This is a very good one from Capriol Investments. These are the hash ribbons. So basically, this shows you miner capitulation, which is currently already a month in capitulation. And the thing is, so this is when hash rate is dropping. And normally the thing is, when do you have to buy back is when hash rate is going up again. So when the capitulation is over and it's going back up again, then you know it's still bullish because of course, hash rate still needs to go up. If it would go down only, yeah, that will be super bearish for Bitcoin. Here as well, another chart. So you see here the miners are capitulating because the hash rate is going down. You saw it FTX bottom. You see it right now. I think this was a lot of banks capitulating, and this was the all-time high in what was it, April, when we had the Coinbase IPO as well, miner capitulation. So this is also a good metric to see if we are forming a bottom or not. So yeah, I just want to show this real quick. So the biggest Bitcoin miner, Marathon Digital, sold 1.2K Bitcoin yesterday because they are capitulating. Maybe you don't have to buy right now yet, but I think this is forming a bottom. Miners are capitulating, and when this will be behind us, then there will be no stopping to Bitcoin, and it will go straight to 100K, in my opinion.
Yeah, they still could be selling a lot more, though.
Exactly, they still could be selling a lot more, but eventually they will just capitulate.
Yeah.
Capitulation will be over, and then. So I don't say to go all in right now, but look at that metric when they are done selling. So like I said, when the hash rate is going back up, then this should be your cue to, okay, let's go all in Bitcoin. Well, at least according to that metric. Like you see here, I have a lot of metrics. That's why I did the bullish, neutral, and bearish thing. So to give you a good overview of which metric is bullish, which metric is bearish, and to form an opinion on the whole Bitcoin valuation metric thing.
Yeah, it's interesting. I didn't look at it that way on the miners thing.
Well, it's important because Bitcoin is still a blockchain, and the miners are the ones that secure the network. So basically, they're the most important participants, not the day traders charting the price. I'm sorry, but
no, it's okay.
No, and then the other thing. So I'm almost done here. So the other things, I didn't really wrote something about it. So the political thing is war risk. It's been a while. I read something about the war. I don't know if you've seen anything lately. So
Not really,
I think it's neutral. Yeah, I think it's just neutral. And then the thing you talked about it earlier, the market sentiment, because Bitcoin is something that's really hard to value. Like I see, I'm trying here. I'm trying to evaluate it, give it a fair valuation. The best I could come up with is the energy value. Another good one is the Metcalfe law, but I'm not going to use it anymore because everything is on centralized exchanges. So market sentiment plays a big role as well in Bitcoin. And I'm going to start with the seasonality. So the seasonality meaning is if Bitcoin went up or down in a specific month. And I got something here from Kane Island. He wrote a research note about it. I'm not going to read it for you guys. But if you just look at page 3, so the month July is the best performing month in Bitcoin history, with 6 months that were positive and only 3 months that were negative. And if you count all the July months of Bitcoin's history together, you see an increase of 207%. So Bitcoin is still a very, very good month. July is still a very, very good month for Bitcoin. Do with it what you want. I gave it an importance of 20%, so it's not that enormous, but something you can look at.
Yeah, I also wouldn't give it that important of a thing because it still can do whatever it wants, you know. It's not because it performed good in 1 month in the past that it's gonna do it again, but still a nice way to look at it, I guess, cycle wise, and you know.
It's more like a self-fulfilling prophecy thing. So when everyone believes Bitcoin will go up that month,
Yeah.
Bitcoin will go up that month
Yeah.
because people
Yeah.
will be buying. So,
Makes sense.
but but I don't think, like you said, it's super important. I only give it 20%. I even can let me give it 15%. It's and then the thing, you already said it before, and I wrote it here as well. So the market was just too bullish. These last few weeks, everyone was charting 100K. Plus, there were some other top signals with, for example, the Phantom Wallet
Yeah.
was the number one in the App Store. And most cycles, so I discussed this a lot with my other co-streamer for my Saturday stream. He's super bearish just because of only this metric. And I said to him, no, it's crazy. Why do you only look at this metric? And he said, yeah, every cycle when these top signals were going off, like for example, I wrote here the celebrity rugs. So there were a lot of celebrities making meme coins and rugging them. And when the well, it used to be the Coinbase app, the number one in App Store. It marked the top. But I
Yeah.
said to him, "What? We're just in the beginning of the cycle. It has nothing to do with Bitcoin." And what I said to him and what I think is this is maybe something only meme coin related. So what I think is the meme coins are maybe at their all-time high and their top, well, their local top for a couple of months. But this has nothing to do with Bitcoin, in my opinion.
Yeah, it could be the case.
So that's why I only give it a 20%, but it's still bearish. So it's something you can look at. But still Bitcoin related was that everyone was charting 100K. So when you see your Twitter timeline, when everyone is charting 100K, when everyone is super bullish Bitcoin, it never lasts. Okay, take a step back. I'm
It's
sorry to say, but not everyone can get rich at the same time.
Yeah, it's crazy how fast it changes though, because like if you just look at it on the daily chart, like we're now down, what is it, like 5% or something? Like on the weekly it's literally nothing, and the sentiment has turned, you know, 180 degrees. Everyone's back to calling 40k. So yeah, I would say it's more effective on the low time frames even. But yeah, calling for significant downside, like it's always the same. You know, you're trading at 70k. Everyone starts calling for 40. Everyone starts calling for 100k. Then you dump to 65, and then everyone starts calling for 40k. But at the same time,
It's
you
crazy.
you're just in a range, right? And at the high, so
Sentiment in crypto flips daily. It's
yeah.
so crazy. I think it's just people are too long behind their computers and have a too low time frame. If you just take a step back, like I'm gonna show your screen real quick here. You're on the daily. You can see it's still. Oh, sorry. I'm showing your screen now. It's still super bullish.
Yeah, exactly.
There's nothing to
That's
say about this. Just take a step back.
that's what
Take
I'm
a
saying.
breather.
I think like those sentiment, because yeah, it's easy to say everyone, right, is calling for 100k, like who's everyone, but it's still a good thing to see the general sentiment on Twitter. And in my opinion, it's more effective on the low time frames than just use it for day trades. You know, I mean,
Yeah.
in confluence, of course, with other stuff, but
Yeah, that's maybe something we have to say. How I value Bitcoin and where I talked about it, it's not to day trade. I don't day trade myself. I only swing day trade. So what does that mean is I only take a trade maybe once every few weeks to ride these micro waves and to make money that way. I don't day trade. It's too stressful for me. If you want to day trade, then you have to look at more to the charts like George does.
yeah.
Yeah, I can go. I think I have 1 more minute. It's not that super important. I'm going to show my screen again. So what I wrote here, what you also can do is, but I didn't prepare it. You can compare it to other assets, for example, gold, as in, okay, gold has that market cap. I think it's 10 trillion. What percentage of that should Bitcoin be? Something you can do. Maybe I'm going to give it like a 5% or 2%. It's not really important. You can do this the same with other national currencies. If you think Bitcoin should be a currency, I don't think at the moment it's designed that way. Well, it was designed that way, but I don't think currently it's that. maybe in a couple of years when they fix Lightning Network, who knows? Then the velocity of money. So this is a way how you value currencies, basically. So the dollar is valued that way, and other currencies are valued that way. This is basically how fast and how much a currency exchanges hands in the economy. And at the moment, you can do that for Bitcoin as well. At the moment, it's really at an all-time low that we hadn't seen since 2011. So Bitcoin is not exchanging that much hands. But like I said, it's a flawed metric, like I said, with Metcalfe's law, because most trades are happening on centralized exchanges. So you cannot use that either. Then we have the stock to flow model. Of course, that's bullish, but I don't believe in that. I don't think it works very well. And then, of course, we're here at the end of my Excel sheet. TA, technical analysis, like we saw in the first 20 minutes from George, which is super, super important in crypto. That's why I gave it 100%. I wrote here, this works very well in crypto because nobody really knows how to price any of this stuff anyway. So TA is basically a tool to measure sentiment and reveals biases and repetitive human psychology in markets. So George, I wanted to ask you, so to fill in my Excel sheet, where do I put this X for TA? Is it bullish, neutral, or bearish at the moment? And let's have it on a time frame of a month. So let's say we do another episode 3 next month. Do you think it's till then bullish, neutral, or bearish?
You mean over a time frame of 1 month?
Yeah.
Then I would say
Just
neutral,
till
probably.
our next stream.
Yeah.
Okay.
Then I'd say neutral. Reasoning being quite simple, because we're basically trading in a weekly range, right? So could be trading here for the next couple weeks, like I explained. If you're asking me on the high time frame, am I bullish or bearish or neutral? I'd say bullish.
Maybe you can give the long time frame, medium time frame, and short time frame would be nice.
I mean, short time frame, I'd say neutral to bearish, because like I said, there's still some clean lows below us, untapped demand, which I think we could be going into, but we're still trading in a range. And then midterm, like over a month, I'd say neutral, because of that weekly range, and because I think we could be spending a lot more time in this range before eventually making a bigger move. And long term, I definitely say bullish, because if you look at it on the monthly, like I don't really see a lot of reasons to be bearish here on the high time frame. Last monthly candle lows have been swept. We're trading above our monthly key resistance at 65k. So as long as we're trading above there, like I have to be bullish on the high time frame.
Yeah. And I think my fundamental side aligns perfectly with your TA. So basically, on a shorter time frame, medium time frame, let's say a month. I'm just neutral as well, because like I said, the Fed will start cutting their rates in September. So I think this will just stay in this range till August.
Yeah.
And then looking at the shorter time frame, it will be really, really important what the Fed, so what Powell says this evening at 8 p.m. CET, if he's bullish or bearish. And if he's bearish, this can mark, bearish meaning that he will say that he will not cut interest rates anytime soon. Then we can drop another 10%. So, and even with all these a lot of leverage in the system, we can see some weeks towards the downside. Yeah. But the same can happen towards the upside as well. If he says, okay, next meeting is going to be a cut, maybe we go 10% up. Who knows? Yeah. And then over the long time frame, I'm super bullish. I think we're going to see 100k by Q4 this year.
Yeah. Amazing. FA meets TA. Beautiful.
And we aligned perfectly. I think it's a great concept we're doing here at this stream. So if you guys like it, put it in the comments, and then we're gonna continue doing this. To end, we're gonna do a little Q&A. So if you guys have any questions, put them in the comments in my stream or in George's stream. I have your stream, your chat open, by the way, on my phone, so I can follow as well.
All right. Yeah. So if you guys have any questions,
yeah, it can be for George. It can be for me.
Don't forget to like, by the way, subscribe, and follow both of us on Twitter. I have the link of Jack's Twitter and YouTube in the description, so go check it out as well.
Yeah, same. So for my viewers, and I don't know if I have to believe it, but on Twitter I have 1,200 viewers. I don't think it's true. Maybe it's 1,200 people that came to the stream, but
yeah,
maybe didn't.
I think it's just the views on the tweet.
But anyway, what I wanted to say is follow George as well. I think he's the best guy on Twitter for range trading. Follow him, and I think also his educational streams on Tuesday and Thursday are one of the best you can watch. Just watch that 2 times an hour every week, and you know everything you have to know about the markets.
Hey, thanks, man.
Come on, guys. Where are the questions?
No more questions.
That's clear.
Yeah, we just explained it that well.
I think we just explained everything you have to know about Bitcoin from the TA side to the fundamental side. That there are just no questions at all.
All right. Jack, have you considered reading 4-year cycle? Would that matter?
The 4-year cycle, is that from Bob Lucas? Is it that one? But I didn't follow it that well. So, or is it just the 4-year cycle? Do you just mean the 4-year halving cycle? In the 4-year halving cycle, I do believe, one, because it aligns with the global liquidity cycle, and two, you cannot fade it completely, because like I said, every 4 years, the inflation rate of Bitcoin goes down, and because of that, there is less selling pressure from the miners. So of course that helps as well. So of course the 4-year cycle is still intact, but I think we will see less of these swings over the coming years. Did I answer that well, or is it another 4-year cycle that you're talking about?
When episode 3, probably in a couple of weeks, you know, we obviously need some more, something to happen, some more price action here to develop before we do another one, but we'll definitely do some more of these streams.
I think we're gonna try once every month or something. I think that would be great, because I cannot say the same thing over and over again every single week. My macro things, they don't change that quickly, so if we're gonna do this every week, then it would just be boring for you guys. So we're gonna try to do this every month, and we're gonna try to do this every month the best we can. I got 2 questions from Twitter. From Danny, Q for Jack, heading into summer and towards the elections. Given that you said we're just at the bottom of the liquidity cycle, is there anything short-term bearish you see that aligns with the TA? So the short-term bearish thing, looking at that, is the DXY strength, as I have it here. So the DXY is really strong. Why is that? So because of the employment data, that the Fed doesn't need to cut interest rates. And the other central banks did cut their rates as well, which makes the dollar very, very strong. Like me and George said before, the DXY and Bitcoin are inversely correlated. And the dollar is very, very strong at the moment. I have this trend line. I'm not that good of a TA guy, but there is just a super obvious trend line on the dollar. Dollar is going up, dollar is going strong. The TA side is on the side of the dollar. Fundamental side, the Fed doesn't need to cut, so the dollar will even get stronger. So this is short-term bearish for the liquidity cycle. On the other hand, like I said, there are these elections in November, so they will start cutting as well. So it's really hard to say. I think we will know it by 8 p.m. this evening. What Powell says, then I can give you an answer. And then Holding Love, George and Jack, are the ETFs in controlling price with large ETF buys, but parallel short CME positions. Yes, so I think you're just tuning in. So this is something I explained a couple of minutes ago. So basically what is happening is, I have it right here. So this is basically called a cash and carry trade. So basically what a lot of corporations are doing is they are going long Bitcoin by buying the ETFs and then going short BTC on the CME futures. Why are they doing that? Is because they get a funding rate of 14%. Well, right now today it's 10% because a lot of people know about this trade by now, and that's why they're doing it. So basically, they have a risk-free 10%, which you take every day, because now the risk-free rate in the markets for the dollar is only 5%. So if you can have now a 10% analyzed, of course you take it. This is just 10% free money. So so they are doing it because of that, not for controlling the price.
What reaction?
Sorry,
Oh.
yeah, sorry.
What reaction are you expecting from CPI? So, I wanted to answer that for me, for the most part, like how I've seen these news events like FOMC and CPI, the price action on Bitcoin is almost always the same. People expect price to move significantly from that news, and then what it does is it either wicks up, then wicks down, and then returns to the price where it's traded before the news, and then you just like it just takes the highs, takes the lows, and then acts as nothing happened. So
can you leave it back?
No.
Can you show it back? You drew it perfectly. So the thing is, the price action we saw yesterday. So this happens all the time. Every time, 48 hours before the FOMC meeting, the price drops by 10%, which we just saw yesterday. And then the moment he starts talking, price shoots up, then price shoots down, and when it's done, the price is just where it was the day before. It's crazy. I don't think maybe we won't see it today, but
yeah,
for now we always saw it like that.
exactly. So yeah, what do I expect? I mean, I'm not a fan of especially of trading news events. Like, I'm just sitting in the trades I have, but I definitely wouldn't enter any new trades because of the news. So yeah, no real expectation for me, to be honest. If I had to give you one, I'd say non-event, purely price action wise, you know.
I'd say watch out with the leverage, because that's something that can happen, that you just lose your position because of too much leverage.
Exactly.
And probably like a non-event, nothing will happen. Oh, there's someone at my door. Well, it's okay. I can. It's probably a package. A question from G Armo. So all clear to me. Conclusion: focus on Bitcoin and Ethereum and couple of narrative leaders till August. Then start positioning in mid and smaller market cap coins. And these are exactly my thoughts. So I wrote about this a couple of weeks ago, maybe months now. That also in a high interest rate regime, which we are still in, Bitcoin does better than altcoins. So which means is the moment the Fed starts cutting rates, so like I said in September, then it will be your time to go into smaller cap coins as well and to make more money. So right now we're at the time to not lose any money. Mm-hmm. And I think later in the year we will be in a time that you can make a lot of money. What do you think? A couple more questions?
Someone asked about Ethereum. We're gonna stick to Bitcoin for this stream, but if you want, tomorrow I'll go live again, and then I'll do requests as I always do. So, but for now we're not gonna cover Ethereum. Inflation causes liquidity to rise, if I understood it well. Someone asked in my chat.
Yeah. Yeah. Well. It's basically because there is more liquidity, then inflation is rising. So it's like it's not because there is inflation then that liquidity will rise. Mm-hmm. It's because there is more liquidity that inflation rises.
The other way around.
The other way around, and because so inflation rises, the other assets are going up. Mm-hmm. I think I gave a little economics class, quote unquote, on my last stream that I did this Saturday. So if that topic interests you, I think it's the first 15 minutes. I talk about this a bit more in length. I compare it to gold and to the prices we saw 100 years ago, so a bit more inflation related. So if you want, you can watch that. I have a long question here from Danny. So follow-up question then, please. DXY correlation is often strong, but there are also periods where the correlation deviates slightly. True. We have seen periods before where Bitcoin and DXY rise together. Could you see this happening in the next 2 to 4 months where DXY and risk assets rise together before eventually falls and the correlation is restored? Exactly. Yeah, I think we will see this happening as well, because I think Bitcoin will rise, and I think the DXY will rise at the same time. So that's why I'm not super bearish. That's why I'm still bullish, because like I said, because the DXY strength, this is normally bearish for Bitcoin. But I do think we're in an exceptional scenario, and you see it also right here in this letter from sorry, I forgot the name, from Elizabeth Warren, the senator. She said everything, this is not helping, the rates are not helping, the dollar is just getting stronger, and meanwhile the housing prices are going up again. So you just need to cut it, or because if they rise at the same time, all the assets and the dollar, then all the Americans will have a lot of problems. So I think this is a possibility, yes. So, and this is why basically what I'm doing with my own money, so this is not financial advice, I have a part in Bitcoin and another part in dollars. I'm a European, but I still have my part in dollars because I think the dollar will rise against the other fiat currencies. And as well, you have a higher yield in the dollar. I think I have my yield at 5%. So I'm doing 5% yield on the dollar because I also think it will rise against fiat currencies. And the other portion I have in Bitcoin because I still think the future is bullish for Bitcoin, even if we're neutral right now.
Mm-hmm. Makes sense, yeah. It was in, I don't know, it's like for Bitcoin and on crypto Twitter, it's like in trends that you see new things pop up, right? And I don't remember exactly when it was, but I don't know, like 2 years ago or 1 year ago even, people like were purely focusing on watching what the SPX was doing and then expected Bitcoin to do the same, you know. What I've been saying is that you trade whatever chart that is in front of you and don't pay too much attention to it. Of course, it will most likely rhyme, but it doesn't make sense in my opinion to trade Bitcoin. For example, go short on Bitcoin because the S&P is dumping, and yeah, as you could see, it faded away, and now there's almost no one talking about it anymore. And it's the same with TA. You know, there was a time when the Ichimoku cloud, for example, that was very early back in the days, like in 17, 18, 19, I think. Ichimoku cloud was all over crypto Twitter, and then it's this trend, then it's that, then it's liquidity, then it's ICT, you know. Everything comes and goes away, so you don't have to believe everything you see, and most importantly, there's no such thing as something that has a 100% strike rate and that works perfectly, because if it does work almost perfectly, it's more than likely to go away in no time, because everyone will start using it. That's
correct.
That's something I've learned over the years.
Maybe one thing I want to show, and we're gonna end with this, I think, or if there are still more questions. So I remembered because you talked about the Ichimoku cloud. This is a trading system that I like to use a lot. To know where I have to buy, because I'm a trend trader, like I said, and the Ichimoku cloud is a trend-based trading system. So what is the Ichimoku cloud telling us right now? We're still bullish because we had a bullish TK cross above the bullish cloud, but we're dropping. So where can you buy if you're still not allocated yet or you want to buy more? So what I'm going to be doing is I'm going to buy more here on the Kijun. This is called the Kijun bounce. So sometimes when the price is overpriced, it comes back to equilibrium. So basically the Kijun, that's the average price of the last 60 trading days. This is right here at 64k 200. So I'm gonna buy here. I'm gonna buy on the top of the cloud, which acts as a support. Maybe I can do it like this so you guys. Oh, too big. I'm gonna buy here. I'm gonna buy here. Then I'm gonna buy here. This is a long-term support on the monthly from last cycle. Up, and then last buy is here, and I don't think we're gonna go lower. So these are my 4 buys. Not financial advice, but that's what I'm doing. That's how I'm seeing it.
Yeah, the first 2 buys line up beautifully with the area that I marked as well, those clean lows. So I'll probably be adding some to my... I said it before, like I'm not gonna add down here because it's still too close to...
I don't think you're showing your screen, George.
Oh yeah. So what was I saying? Yeah, I'm not gonna add to my longs here because it's still trading too close to my current entry. But if we were to see lower prices and I can add to my longs lower down, I definitely will. And those levels you just said line up beautifully with the area I'm looking to add as well. So always nice to see. All right.
I think this was a great stream. I hope everyone enjoyed it.
Exactly. So guys, if you enjoyed the stream, go follow Jack on Twitter, subscribe to his YouTube, go like the streams, and yeah, pay attention to our Twitter pages. We will definitely do this more in the future. So stay tuned for episode 3, I'd say. Jack, thanks, and see you next time.
Thank you, my friends. Yeah, see you guys.
Bye.
Bye, everyone.